Hey folks, so in this video, I just wanted to talk about some news that's going on right now and also some news that's going to happen in the future. And I also wanted to finish off with some technical analysis. So just starting us off, over in China, they have this big holiday. It's called Golden Week. So that means for this entire week, the Chinese markets, they're going to be closed. Now, moving on to the next point, the UK, they actually pulled a really big U-turn on their income tax rate cut. So essentially, what they were planning to do was they were going to give tax cuts for the wealthy, people that are in the 45% tax bracket. So there's quite a bit of pushback on this. And essentially, they had to give in. They had to do a total U-turn on this. And basically, it's just scrapped. So what did this actually do for the British pound? Well, it was actually pretty good for the British pound. If we're measuring up the British pound against the United States dollar, when they announced those tax cuts, it literally broke a fresh low. And from that point, it recovered a bit. But then as soon as they dropped this news right here today, I mean, we saw this extended rally right here. And it came to a point where the IMF actually had to chime in, saying that, they're really concerned about their policy. So, a lot of things happened, and I guess the markets kind of anticipated that this would happen. So, definitely seeing some recovery right here. Now, another big piece of news that we are going to get on October 5th is this OPEC Plus meeting. So they are going to consider cutting production by 1 million barrels per day. And that meeting is going to happen on October 5th, so that is on Wednesday. So we can definitely see crude is taking a massive rally from this news. So basically here was September 30th, and then basically here is today and the future. So basically huge, huge, huge rally. So literally went from about 79.30 to 83. So yeah, oil prices could go up again. So a little bit worrisome for our inflation situation here. Now, this week, we do have quite a bit of job data. So tomorrow we're actually going to get the JOLTS job openings. So this is basically telling us how many job openings there are in the United States. And we would essentially like to see this number fall. So think about this for a second. If there are a lot of job openings, what does that mean? It means that companies are having a hard time hiring. It means that they have to pay you and me more money to get people to work for them. So that is basically wage inflation. So we would like to see this number come in lower. So right now it's forecasted to be 10.775 million, but past forecasts, they've been significantly wrong. So ideally, we would like to see this come in weak. That would be bullish for the markets. We're also going to have non-farm payroll. We would also like to see this come in weak. That would also be bullish for the markets. So non-farm payroll, that news comes out on October 7th. So one thing you should know is just every new month, at the beginning of the month, we see jobs data. So that's just something you should always keep in mind, that jobs data is at the beginning of the month. Now, the week after this, we're going to get some CPI data. And the scary part is that they're actually forecasting the CPI to come in higher. So this is looking at core CPI. So for September, we're expecting 6.5%. So that's a little bit worrisome right there. Now, that's basically all the news that I wanted to cover, which I actually lied because there's one more. So today, Tesla fell pretty significantly because they missed delivery numbers. So I'll talk about the technicals here soon. So now let's just take a look at the charts. So let's just start with Tesla right off the bat. So the one thing I want to note with Tesla is that we have this head and shoulders pattern that's starting to become very, very noticeable. So we have this left shoulder right here, we have this head right here, and then we have this right shoulder that is building out right now. Now, another thing that I want to pay attention to is right here, we had this massive, massive candle. Now, this was right around early 2020, or yeah, right around early 2020 is when this happened. So we had this massive candle that literally took us from here to there. And that's essentially what we're seeing getting faded right now. This area to this area. So, maybe we could find a little bit of support right around this area right here. Or we could just potentially fall right down to this 207.17 level. And you can see right here that this rectangle right here is a demand zone. So this rectangle, it's going from basically, let's see, 258 to that 207.17 level. So this is essentially just an accumulation zone. We saw people buying shares up right here, massive rally, and then they're selling it off again. So are they going to start accumulating here again? Or is this just going to be a distribution phase where they further sell off shares and we systematically start falling, and we essentially close this entire shoulder back down to the neckline? So that would be a pretty significant fall. So you definitely do want to pay attention to what is going on in Tesla, because we're definitely starting to see price action cracking pretty significantly. So let's go ahead. Let's take a look at Apple. Now, if we're looking at Apple, this is the weekly chart right here. So I do want to note that we're essentially within this demand zone right here. So this demand zone is, let's see, the bottom of it is right around 138, and the top is right around 150. So we could chop around in this range again. So that's definitely a possibility. Now I'm going to go over to the day chart. So if I go over to the day chart, I can see something pretty interesting. So this pink line is the 200 moving day average. This green line is the 50-day moving average. So right now we are literally seeing these two on top of each other. So what could likely happen is that if we continue to sell off, we could see this 50-day moving average falling underneath, and this 200-day moving average essentially is on top of this moving average. So then, it's definitely not a good situation to be in. Ideally, we would like the 50-day moving average to be above the 200. So now we're starting to see that price action with the moving average curl down. So definitely a negative, just a negative situation overall. So one thing that I do want to point out here is if I zoom in right here, you can see that Friday's price action pretty much got undone today. So this entire candle essentially eliminated just from today's bullish price action. So, obviously the thing that we have to worry about is the Apple earnings, because, they were talking about iPhone 14 sales just not really panning out. And, they were expecting it to be much higher, but that doesn't seem to be the case. So, if we're going to look at this quarter earning, hopefully, the revenue numbers come in positive, and hopefully, it's a little bit higher than last earnings, because last earnings, the revenue numbers were pretty pathetic. The year-over-year growth just was not there. It was essentially close to zero. But overall, I'm expecting Apple revenue to pretty much be 8 to 12% growth from the prior year. So just considering how strong of a year 2021 was, I still think 8 to 12% isn't horrible, but definitely just given the macro situations, I still think Apple is a little expensive. Now let's go ahead. Let's look at the next ticker. So now I want to take a look at SPY. So the one thing that I really want to point out is take a look at this yellow circle. So what I'm trying to show you here is that essentially, we were at the 50-day weekly moving average, and we basically dropped all the way down to slightly below the 200 weekly moving average. And that was all done within a few months. I mean, that essentially got accomplished in a quarter. So that's some pretty significant downward price action. Now, it's also pretty bearish to know that we closed underneath the 200 weekly. I mean, this happened on SPY. It also happened on NASDAQ. So, if we start seeing multiple weekly closes underneath this 200 weekly moving average, well, then we risk essentially falling into this new zone. So you guys can see that this new zone would be right here in this accumulation phase. So this was a demand zone right here where people were accumulating. And then you can see, after they did their accumulation, massive, massive rip. So, we don't know yet if this zone right here is going to act as another accumulation zone. But it was right here, and then you can see that this was just a dead cat and we sold off. So, that begs the question, are we going to break under? And we won't really know until we actually see it. So, ideally, we stay above the 200 weekly. 200 weekly right now is at 358.16. So if we do start breaking underneath that, the next trading range would be 358.16 all the way down to about 320 right here. So that is a pretty significant fall if we were to start breaking underneath. But, this would definitely be a pretty good zone, in my opinion. This is not financial advice, to be purchasing right around here for a longer term outlook. Because, at this point, SPY would be over 25% drop from the top. So to me, that's a good deal right there. Now, let's go ahead, take a look at XLF. Now, if we're looking at the financial sector, you can see that we definitely had a pretty strong day today. And we also closed underneath the 200 weekly on Friday. So, that's another bearish thing to look out for. Definitely seeing a lot of weakness in the financials. But given that we do have bank earnings, so we have JP Morgan on October 14th. We have Bank of America on October 17th. So just given the way that bank stocks have fallen, does it really make sense to continue to pile on to these bank shorts? To me, it doesn't really. And I think that is kind of what explains the strong movement in the financial sectors today. I think people are just kind of offloading some of their shorts just because, they don't want to take that risk of earnings. And then likely after they see the earnings, they'll probably just either pile on those shorts again if the news is bad, or if the news is good, I'm sure we'll see a big rally. But there is another trend line that I do want to pay attention to. It's this resistance trend line. You can see we rejected right there, right there, right there, and right there. So we have 4 very clear rejections off of this trend line. If bank earnings do come in a little bit better than expected, maybe we can actually break through this resistance right here, and then we could hit this trend line right there. And then do we reject? No idea. So, when we see it, we'll see it, and then we'll talk about it then. So let's go ahead, take a look at the next ticker. I'm going to look at JPM. So if I'm looking at JPM, there's something pretty significant that I'm looking at, and it is this gap on the weekly chart. Now, it's not very often that you see a gap as big as this on a weekly time frame. It's actually pretty rare. So, what's even more rare is that it didn't get filled right away. This goes all the way back to before 2020. So, you can see that there's a lot of accumulation right here. This was a demand zone. And then from this point right here, we just had this massive, massive gap up, just straight up to the moon. And then right here, slow fade, almost close that gap. I mean, you could say we pretty much did. But then right here, we did that full on gap close. So it's going to be very interesting to see what happens here because, we had that full gap close. Now, if we do start breaking under this support right here, this is right around 104.44. Well, then things could get really, really, really ugly. And, we're looking to enter this zone right here. So, this was the prior demand zone that took us all the way up here. So, we could go as low as 91-ish and basically move from 91 to 104.44. So that would do some significant damage on the SPY. And, likely if JP Morgan's falling down, pretty much all the other bank stocks would probably follow suit. So definitely something to watch out for. Now, if we are looking at this from a bullish perspective, the risk to reward doesn't look too bad, right around 104.44, just because this is such a key level. Now, it'll be very clear when you need to get out of any kind of position. And, that will obviously be when we fall underneath this line. So, that's just me, hinting at some stuff, not financial advice. Obviously, do what's best for you. And then lastly, we're going to look at the VIX. So in my last video, I will admit, I did get the lines a little bit wrong. And in this video, I do have it corrected. So definitely apologize for that. Now what I'm really looking at is this right here, this trend line. So right now I'm on the weekly time frame. And you can very clearly see, I'm hitting this trend line, this trend line, this trend line. And then I'm kind of going through these ones. But then you can see that I hit the top of this body. I hit the bottom of this wick. And then you can see that we pretty much staying above this right now. So, ideally, I would like the VIX to close underneath this trend line right here on the week to be a little bit more bullish. Now, let me show you this on a day time frame. So let's just zoom in a little bit right here. Pay attention to this. So essentially, let me actually move this trend line just a wee bit. I have it slightly off. So yeah, that's pretty much where I want it to be. So you guys can see, I'm pretty much catching the body of this candle. I'm catching this resistance right there, catching this support right there, pretty much this bounce right here and this bounce right there. So you guys can see right around here, we're having several bounces and we're holding up this trend line. So my fear is, can this actually start building out a bull flag? And then do we have another rip higher? So, essentially, we could be chopping around here for a little bit. And then maybe, we bounce off this support right here. And then this creates a new higher high. So that is definitely something that we need to watch out for on the VIX. Ideally, just break through all of this. And then you'll know, oh, okay, we are definitely bullish right now and we're going to have another one of those rip your face off rallies. So I hope this video was helpful for you guys and have a great one.